got a few questions here this morning. It says, are you more bearish on early cycle in small mid-cap U.S. equities or some of these select Eurozone equity markets?
Oh, the small and mid-cap equity bubble in the U.S. is epic. It's been, as everyone who manages money in the U.S. knows, it's not only the benchmark now for most, but it's also fueled this kind of cheating or hugging of the index. So people buy like their best idea, and it's a name that's not in the index. It could go into the index, and that's how the game goes. But the other side of that game is that there's nowhere to get out. So a lot of the index funds own these things, small and mid-cap stocks. So if you look at, we did this interview the other day with a contributor on Seeking Alpha called iRobot. Like 18 or 20% of the stock is owned by index funds because iRobot, small cap stock, is in the XHB, which is a housing ETF, a vacuum cleaner stock in a housing ETF. I'm sure, I guess whoever makes up the rules, But again, that's what we've done to portfolios is that it's like jamming mashed potatoes into a garden hose. Eventually, you just cannot get out of there. And that's what's going to happen, I think. I think the small to mid-cap bubble in U.S. Equities is much larger than European equities on many scores, which would include valuation. As many of you know, depending on which calculation you look at, the Russell 2000 trades at 55 to 80 times trailing earnings, which I think most would qualify as a significant bubble. So again, it's just something to be aware of, as everybody doesn't call it a bubble.
Right. And last question here, and you touched on this in the early look, but when someone sees that you have 0% allocation to U.S. equities, how should that be interpreted? Is that actually zero? Is that balanced? Or
well, I mean, like many things here, and again, it's going to be an exercise for the next half decade. The first half decade for me has been a learning experience in trying to teach our process or trying to commercialize what it is that I do. As most of you know, I don't wake up really particularly caring what anybody else does. That can hurt me and help me. But when people talk about asset allocation, it's a good example of what everybody else does versus what I do. What I do is what's in my own account. This is a proxy of my own net wealth. So I don't really have to not be in cash. I can go to cash whenever I want. But when I see something like in equities or bonds or commodities, for example, when it goes to zero, in hedge fund terms, I'd call that a net neutral position or a net zero position from a beta adjusted perspective. So in other words, if all my betas were equal, I'd have 10 longs and 10 shorts. Now, when the market, you can go to net negative, maybe we should start to show a net short position. So some clients will ask, hey, well, what does that mean if your max negativity is -5 and your max bullishness is +5? Well, it's still -5. I mean, I don't know how many other ways I can write it, but I have 0% U.S. equity asset allocation. I write the word, I think it's a bubble or the words, I think it's a bubble in the early look 2 days in a row now. I said that I felt like it's a bigger bubble today than it was yesterday, and I would submit that it's probably going to feel like more of a bubble tomorrow than it felt like today. So again, I don't want to mince words about this. I want everyone to be crystal clear that I could be completely wrong on it. But if I'm right, a lot more people are going to be wrong than I am right now.